Don't believe everything you see on YouTube. Just because somebody has a YouTube channel doesn't mean that their opinion is any more valid than yours. What really matters is, do we get the macro picture right? For Ethereum, for example. And for that, we can do very simple due diligence. We can have a look at what did a certain YouTuber say about Ethereum at a certain point in time. Here, with this Ethereum chart, did the other channels that you're following predict this bounce? Or did they talk about this potential decline? Right? In the end, it's all about opportunity costs. We are getting into Ethereum over Bitcoin or over the altcoins because we expect more returns, relatively speaking. There's a lot of correlation within crypto. So when Bitcoin is going up, Ethereum tends to go up. When Bitcoin is going down, the altcoins tend to go down. So all the things move in the same direction at the same time, but sometimes capital moves into one asset class more than into another. And that's why we look at dominance charts. How important is a certain cryptocurrency within crypto? Does Ethereum underperform or outperform at a particular point in time? And so of course I've published my fair share of Ethereum videos on this channel as well. And so have a look at those titles. A historical chance to buy Ethereum, or are people sleeping on Ethereum? This was in April 2025. So here's the one from the 17th of April. We are looking at Ethereum dominance and pointed out how you are very low compared to historical bottoms in 2019. Here a very similar video, again published a few days afterwards, where we started the bounce. And of course, the rest is history. We did see the bounce. Now, a lot of YouTubers always say, buy this asset. It doesn't matter, buy Bitcoin, buy Ethereum, even if it drops 30, 40, 50%, continue buying, we will go back up. But that's not the idea of active investing. The idea is to be as objective as possible to potentially avoid some of the drops, to then buy back in when it's low. And so while some might have said this is a good time to buy, they might also have said it's a great time to buy while we were going down. But again, I just think it's a good thing to do due diligence. For example, here in August and July, the Ethereum disaster. Is Ethereum pulling down crypto? Here's one of the charts out of that video. This, by the way, was the move from proof of work to proof of stake. Ethereum was in a constant downwards trend. Here's another video out of that time, again with a lot of potential downsides. So at that time I was very bearish on Ethereum. Now I didn't have a crystal ball either, but I am proud of something. I am proud that I'm trying to be as objective as possible on this channel. So if an asset is very expensive, I say that it's expensive. I don't say buy no matter what. If it's very cheap, I also say this openly. I might not always be right, but I do change my view on things as prices move as well. Because at a certain price, an asset can be cheap. At another price, it can be expensive, no matter how solid the fundamentals are. Now, you haven't clicked on this video just to look at the past, right? We want to know what's going to happen in the future. Are we going to see higher prices in Ethereum dominance? Will Ethereum continue to outperform, and will we see another rally of 50% versus the rest of crypto, potentially even 125%? That's the million-dollar question. Now, fundamentally, I think that crypto is a game of capital rotation. So sometimes asset A is very on vogue, sometimes asset B is trendy. But there is this growing pie of capital that gets allocated towards different assets at different points in time. And now, what are the main competitors of Ethereum? It's obviously Bitcoin and it's the altcoin market. And let's start off with the altcoin market, because there's a lot of correlation between Ethereum and the altcoins. And we're seeing a very similar bounce that we already observed with the Ethereum dominance. According to this chart, the potential upside is still quite healthy, 66% versus a potential downside of 27%. When Ethereum outperforms the altcoins by another 20 or 30%, the story might be different. It might make sense to already take profit over here, because does it really make sense to take that much risk just to get a little bit more upside? At that point, the risk to reward isn't that great anymore. But right now, things still look good. Ethereum, relative to the altcoins, is cheap. Now, relative to Bitcoin, Ethereum looks even cheaper. There is potential downside of maybe 23, 24%, but there's also potential upside of 300%. Now, this chart has a very strong assumption. The assumption is that Ethereum will move in line with Bitcoin over the long term. That Bitcoin will not massively outperform Ethereum over the long term. Is that true? I don't know. I am not sure if we can see 300% outperformance versus BTC, but are we currently relatively cheap? I think that's quite clear. Now here's the thing, many assets crash at one point in time, but not so many assets will subsequently recover. It's about finding out the assets that have strong fundamentals in them, that they will stick around for the next 5 or 10 years. And I believe Ethereum does have those fundamentals. For example, over here, this is the staked Ethereum over time. So that's Ethereum that's getting locked up in order to get additional returns. This tended to grow over the years, which was supporting for the price. Now we are at an equilibrium. But it doesn't seem like the long-term holders of Ethereum are suddenly starting to unstake and sell their Ethereum. So this is now locked supply that's probably not going to depress the price at any point in the future. Or have a look at this. This is the tokenomics of Ethereum. Ethereum currently has a lower expanding supply than Bitcoin. Bitcoin inflates by 0.8%, Ethereum inflates by 0.7%. Now there will be a halving of Bitcoin. So Bitcoin's inflation will drop by 50%, it will go down to 0.4, but that's still 3 years away. And let's see what happens with Ethereum in the meantime. Right now the situation is clear, the tokenomics for Ethereum are better than for Bitcoin. But really what matters is, will the asset stay around? And I think the answer is yes, because in decentralized finance, one of the fastest growing sectors of crypto, Ethereum has a market share of 55% in terms of total value locked. In terms of stablecoins, Ethereum has a market cap of 50%, maybe even more, because I'm not so sure if all of the stablecoins on Tron are 100% legitimate. That's a topic for another video, but the market share of Ethereum stablecoins is at least 50%. And that again needs to be put in relationship to the current market dominance, which is only at 9%. So in terms of market cap, Ethereum is 9%. In terms of its stablecoin dominance and its DeFi dominance, it's much higher than that. But then the question is, what could cause all of this? Why would Ethereum now outperform especially the altcoins? Who will buy? Because the upside might not be as high compared to the smaller altcoins. I think the answer is Wall Street is going to buy. If we are a bit more exact, Wall Street is already buying. Here are the Ethereum ETF flows over time, and especially BlackRock is acquiring very, very quickly. If we annualize the last 14 days in Ethereum purchases, we've got 4.7% supply absorption. This is a very similar rate to what we have seen with Bitcoin when we add the Bitcoin ETF and the Bitcoin treasury companies. So we saw 5 million of Bitcoin getting acquired in the last year, which is roughly 5% of the supply, which is roughly the same that we saw in the Ethereum ETF. So ETH is getting bought by Wall Street, which will give it an edge over the altcoins, which likely will push Ethereum up versus all of those small little coins. And so I believe Ethereum is now a very good buy. It's a better buy than having a broadly diversified altcoin portfolio. I believe that most altcoins are going to continue to underperform Bitcoin and Ethereum over the next weeks, potentially months. Now it's quite fascinating that most people take the hard route. Most people try to make money in crypto by finding the next asset that does a 10x return. The problem is that most assets don't do that. Most assets go down. There are a few assets that take a lot of the returns, but it's a market where the winner takes most. On top of that, we also have to be right about the macro environment, as in if Bitcoin goes up, then most altcoins go up as well. When Bitcoin dumps, most altcoins go down as well. So really, I think there are smarter ways to make money. I think it's better to try to not focus too much on the macro. I think it's better to find price discrepancies where you don't have to find the few winners. Let me show you what I mean. What do you prefer investing in? Is it the line at the top or is it the line at the bottom? Now at the bottom, we see Bitcoin's price movement. So this chart starts in February 2024. And as you know, we have seen quite a bit of a drop during that time, a 30% decline after we're now back above 100K. But the chart at the top has much less volatility. During that time, it appreciated by more than 1,000%, while Bitcoin went up by only 115%. Or have a look at this chart here. This starts in November of 2020. And it went up by 9,000%. While at the same time, here is Bitcoin, it only went up by 500%. Now what I'm showing here with those charts at the top are actually not altcoins that outperformed the rest. It's not one of those few winners. Instead, we looked at relative valuation charts. So we looked at the Bitcoin price relative to a very poorly performing altcoin. Now, I'm not saying what kind of altcoins this is, but in general, this is also a Bitcoin chart here at the top. It's just not relative to the US dollar, but relative to a very bad altcoin. Let's make an example. Check out this. This is PIF. PIF had a lot of token supply growth in the last 30 days. So here are the tokenomics of PIF. Over time, there's more and more supply hitting the market. Now, if demand doesn't grow as quickly as supply, the price should be going down. And as per tendency, that is right. So this is now the PIF chart. Now, PIF is an asset on the Solana chain. So let's compare Solana with this. The price didn't always go down. And that's because sometimes Solana rallies. And so PIF comes with it. Again, the problem with correlation, the problem of the macro environment. But when we look at that PIF chart, not in US dollars, but relative to Solana, suddenly we've got a much more stable trend. Now, this is not necessarily the trend we want, right? We don't want to buy PIF, but we want to do the exact opposite, right? We might consider buying Solana and betting on falling prices of PIF at the same time to then get the delta. So in the end, we cancel out the macro because we are long one asset. We bet on rising prices of one asset, in this example Solana, and we're betting on falling prices of the other asset. So in this case, PIF. So overall, what the overall market is doing when it's going up and down, it doesn't matter to our portfolio because one thing tends to go up, one thing tends to go down. The only thing that matters is the relative performance. And then we've got very constant declines. Or if we now flip this chart, if we don't look at PIF relative to Solana, but we look at Solana relative to PIF, we get our nice growth charts. So this is now a more than 500% increase. And again, it's much less volatile compared to buying Solana directly. So this is, I believe, the easy way to make money in crypto. It is a bit more complex than just buying a random altcoin, but in the end, we have the odds in our favor because, again, most altcoins tend to go down because the supply expands over time, and we are also hedged against the macro. We don't care if Bitcoin and Solana go up or down because we go both long and short at the same time. We can have a very constant growth this way. And here is what I mean with constant growth. This is my portfolio development since I started trading this long short strategy. The maximum drawdown was 5.67%. The equity is 36K and the growth over the span of roughly 2 months was 11K. Now, the most important thing here is not necessarily how much this grew. That's of course nice. But what I really like is that the drawdown was so low. We don't care about the macro. We don't care if things currently go up or down. All we care about is pricing inefficiencies. And so think about it. Do you want to buy a lot of different altcoins hoping for the one moonshot that might make up for all of the losses that in the end might never come? Or is it maybe better to just continuously grow with very little downside? I think the latter is better. If growth is predictable and if you can manage our risk properly and if you can make money independent of the market situation, we've got something that's much more valuable than just trying to find the 10x that might never come. Now again, this strategy is not as straightforward as just buying an altcoin on a centralized exchange. We do have to learn a little bit, but I actually made a video just on that topic. You don't have to watch every single video here, but the one at the top, that's the most important one. Using perpetual futures on Hyperliquid to bet on relative valuations. It's 34 minutes after you've watched this. You should understand how to do all of those setups. How to bet on charts like this or how to bet on charts like this. And how to have the odds in our favor, right? With all of those red bubbles over here. And again, be independent of the macro. It's the constant growth that's really attractive. So again, here's that tutorial video. It's part of the premium membership, thebitcoinstrader.com. And of course, I also share my own trades. For example, over here, I shorted WorldCoin recently. WorldCoin relative to Ethereum. So we're betting on Ethereum to outperform WorldCoin. So that was on the 23rd of May. I'm sharing this because this position is now closed and I closed it on the 28th of May. And so in the end, when you've got the right risk management in place and you put on some leverage on the position, you can make really nice gains. Here was the Hyperliquid chart at the time. So it already went up a little bit since then. But yeah, people are making money with this, right? This is not just me cherry picking the data. Here, have a look at this. This was one member that made some money with the WorldCoin short. another one over here and here and here. Thanks, Gerhard. The premium membership paid itself already. And so that's in the end the fundamental idea, right? It's about making consistent gains. It's not about buying random lottery tickets, hoping for the one salvation trade. So feel free to check it out. It's currently $125 per month. It used to be 165, but currently the attention on crypto is comparatively low. Once all the tourists enter the space, I will of course raise the price again. But right now, if you sign up today, then you will lock in that price. So everybody that signs up now will not get affected by the future price increase. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. There should be a link to Premium directly over here. You just click on that card and it will lead you directly to the sign up page. See you over there. Cheers.